And we're beginning our broadcast today with cattle markets, and according to Oklahoma State University livestock marketing specialist Derrell Peel, so far in 2021, fed cattle markets have seen ample supplies and a narrow trading range for several weeks. Additionally, crowded feedlots have contributed to sluggish fed cattle markets. However, there is optimism moving into the second quarter of 2021 and on. I spoke with Derrell about it earlier this week and began by asking how the continued drought is impacting the markets.
On a longer term basis, depending on where you are, we've either got too much moisture in some cases, pretty wet conditions, but we've got an awful lot of the country that's still very, very dry. And we're getting down to kind of where, the next month or 6 weeks is going to be a pretty critical period to see how, how things are going to go in terms of that spring, spring green up, spring growth. If we don't get, the initial burst of spring, if you will, we could see some significant impacts in cattle markets as we start a year in a drought, and that could force some decisions on the part of producers here pretty quickly.
What are some of those major decisions producers are going to have to be thinking about?
Well, if producers, a lot of areas were dry much of last year, so they've been through drought. If they made it through the winter, they've probably used up their hay at this point, not a lot of forage to work with. And so, again, a spring drought is particularly critical in terms of how quickly things develop in terms of the need to make decisions. And so we could be looking at some liquidation in some cases or movement of cattle, but probably, in a lot of areas we might be looking at liquidation, and it could be at a level where we would see some broader market impacts. I don't think we saw much of that last year, even though we did see some limited liquidation of cattle at the end of last year, but as we go into this year towards the summer, we could see some enough movement that it might actually show up noticeably in the broader market.
So Derrell, if things are a little touch and go now, could we maybe see that start to turn around in the coming weeks and months?
Well, in general, cattle markets have a fair amount of optimism built in them going forward in the year, particularly the second half of the year. Kind of across the board, you see a fair amount of optimism, and that certainly shows up in the feeder markets. Feeder futures for the fall are actually quite strong, and we've seen very strong feeder markets this spring, really on the lightweight side, sort of the grazing demand for stocker type cattle. But obviously the feeder market is going to stay very closely tuned in to this feed market. And what happens there, where I think feedlots are still kind of pricing in the impacts that we've seen of the higher feed prices we've seen. We're probably not fully reflecting those yet, but we will over the next 2 or 3 months. But that feed market, I think, is got the potential to swing sort of one way or the other, depending on what happens with crop conditions and weather conditions this spring. So the feeder cattle market is going to stay very tuned into that, it will react accordingly depending on what happens in this feed grain market.
Next up, Derrell, we have a viewer question for you this week, and for anybody watching, you can email us or post your questions for our analysts on social media. The viewer today is asking why the June live cattle futures are higher than the April futures, and if you can shed a little bit of light on that for us.
Yeah, you bet. The fed cattle market has been a very unusual situation this spring. We've been looking for a spring rally, through the first quarter, and it's just failed to materialize. And cash fed cattle prices have been flat for about 6 weeks. And so we've got a weaker than normal cash market right now. We've been struggling with ample supplies, heavy carcass weights, just kind of, working our way out of some of the carryover really from last year in the first part of this year in these fed cattle markets. And so as a result, we're currently significantly lower than we sort of anticipated we would be. And that has led to these April live cattle futures being, at about the same level as June, with June actually a little bit premium at times. And the viewer's absolutely right. Typically in recent years, there would be a $6 to $8 discount on June relative to April. So the problem here is not, is not particularly June. It's the fact that April has sort of had to come down to reflect this weaker than expected spring market. And we're still looking for a little bit of rally. April is actually at a little bit of premium to the current cash fed cattle market. So we'll see if that happens here in the next 2 or 3 weeks. And then, You know, as we go forward, June reflects the fact that we still expect to see fairly strong prices from June on, and certainly in the fall contracts, we see that optimism sort of built into the live cattle market.